Get a reader on the day's currency plays and economic outlook. Clifford Bennett from ACY Securities joins us now live. Clifford, great to have you on this morning. What's your sentiment around those other choices when it comes to the greenback?
Well, the greenback is having a little bit of a pullback at the moment, and that does look a little bit heavy in the short term. It's not really helping the Australian dollar very much into the future, I wouldn't suggest. And overall, I think Australia is a little bit between a rock and a hard place when it comes to our falling trade relationship with China. And despite some recent strength in commodities, commodity prices being rather firm. But just one little point, Nadine, on that US economic data, that housing data and all the construction industry data across the US really is telling us that the virtually, I've called it the second biggest housing bubble of the century, is finally cooling off. How quickly it cools off, or whether it's a bubble that bursts, remains to be seen. But I think the warning signs have been loud and clear for a very long time that the US housing market was overextended for where it is in terms of its real economic state at the moment. And prices, of course, have continued to move higher, but that probably won't last much longer either. So I'd be very careful and watchful about what happens in the housing industry in the US as a guide. And generally, US data is incredibly disastrous at the moment, and people are trying to play it down every which way they can. But there is no doubt that the Delta surge is having a profound effect on the US economy. And we're still seeing that very much the case with Australia, which doesn't help the Australian dollar at all. So I think the Australian dollar rally is an opportunity to sell, and I think we will see it, but whether it's today or perhaps a week away is a bit difficult to tell at this stage.
Clifford, let's bring it back home and look at some of the key data pieces today. Government spending and trade on the docket. Of course, I know that you are calling that recession, and we do have that GDP data tomorrow. So what are your thoughts around those preemptive numbers?
I mean, it will be very sad for Australia if we have a weak GDP number for Q2, but I think it will be reasonable. We are now already in a recession. I know that some people have only just started speaking in the last week about there being a risk of a recession. Australia is already in recession. It's unavoidable. Q3, Q4, negative growth. We may even have negative growth in Q1. There's a strong argument for why New South Wales could be locked out of the rest of Australia for an extended period, perhaps another 6 to 12 months. And we've got a major report coming out on that today. And I think in terms of the data coming out on the day today, the government spending contribution to GDP will definitely be waning moving forward. On the trade front, this might be the last strong sort of trade contribution, but trade will continue to contribute firmly, strongly, but not to the degree it has in the past. So the Australian economy is really going to increasingly be squeezed by an underperformance in its domestic economy, as well as deteriorating trade exports. So I think we face more difficult times in Australia than our policymakers and many other economists are probably anticipating or appreciating. In the US, a lot of the senior economists there are talking about the risk of Delta to the economic outlook. That's becoming a reality there as well. And in Australia, with our strict policy responsive lockdowns, our economy is really going to be brought to its knees here. We had a reasonably sort of free run after the last coronavirus surge, but a whole lot of those aspects are not there this time around. There will be no quick rebound for the Australian economy. Of course, there'll be a spike in data momentarily when we come out of this, but we will have a very subdued economic outlook going forward.
So Clifford, then, if you're an Australian investor looking for yield, where should you be looking?
I think you've probably got to look to gold. It's that bad that we've got to go back to the historic ultimate safe haven. So I would think I would be very much looking to gold. I would be very much looking to hedge exposures. Australian stocks have continued to make highs despite the economy slowing. that can only last for so long before some reality creeps in. And I don't think it's going to be the economy catching up to the stock market. I think it's far more likely to be the stock market correcting to the economy. We've really been favouring selling Australia, if you like, not to be too patriotic about it. Selling Australian stocks, not selling Australian stocks necessarily, but having an active investment hedging approach to things at the moment. And the Australian dollar has definitely been a sell. As I've said before on your program, we made our forecast on ausbiz at 77.45. The Aussie would go to 70 cents. Still looking for that, and still think there's risk to 68.50. We're in a consolidation phase at the moment on the currency front, on all currencies. But I do think the US dollar will again be seen a safe haven. And I do think US corporations will continue to want to bring funds home to the US. So the US dollar will strengthen again, and that won't help the Australian dollar outlook at all.
Yeah, so more volatility to come. Clifford, always great to chat with you. Thanks so much for joining us this morning from ACY.